Hello, good morning. This is your friend, Mr. Fitz. It's a pleasure to come back again. And this episode is going to talk about taxes. Taxes is another killer. This is what you paid for just making money. You already pay income tax. This is a good country. When you make money, you contribute to help the non-fortunates. You contribute for the security. You contribute for the infrastructure. You contribute for the country. Is most of us are immigrants in this country. This country welcome us, so we pay our share. So we pay taxes when you make money. We pay taxes when we use the money. We already pay taxes on it to buy something. We pay taxes when we leave money for our kids or next generation. Anything that we leg behind will be taxed again. And also, when we save, when we invest money, there's a difference between saving money and investing money. Make sure that you invest money most of the time because the money you invest make more money. The money you invest can double. You win the money game when the money double. But the money you save just leave there. Someone else use it to invest, but you just put it to saving. And now, if I want to invest money, because we saw in one of the previous episode where you invest money, your money double, you don't want to say, I'm happy to double my money. Now I have 100,000, I have 200,000, I have 1 million, now I have 2 million, and my money double. And you have to pay tax on most of it. So you want to understand where you invest your money, where do you put your money, and or it will be taxes. If you don't know the impact of taxes, it's the same thing when you don't know the impact of interest on your debt, or the same thing you don't understand the impact of inflation and your wealth. You need to understand the impact of taxes of your money. It's very important. If you want to build wealth, to build a better financial future, you need to understand how tax affect you. There's many places that we put our money. One of them we said we call it tax now. Tax now, that means that every day it will be taxed. As soon as you make that minimum for some account, you just make $50 for the entire year, you will be taxed. Yeah, on the 50, you will receive a document that says this is where you make $50 in this account. This is how much you need to declare to pay the government. Here in Canada, it's called about the CRA. You would pay the CRA a percentage of what you make. And you double your money. Yeah, you have 10,000. They don't care about the 10,000. You already pay tax on it when you make it, your job, your business. Now they care about, oh, this 10,000 now double, it's 20,000. Please send me my share. You need to pay taxes. So we want to understand anybody that have a checking account, a saving account, GIC, we buy stock, we have mutual fund, different bond, even though the interest is very low. Every non-registered account, any interest you make on your money, you pay tax on it. And every year, as you earn, you pay. That is tax now and tax every year, every time you make the money. There are some accounts they call tax later. Some plan, you make money, you save the money there, but you say, I don't use it. It's like, I didn't make it yet. It's there, but I don't touch it. And because I don't touch it, I don't make it. You postpone the tax payment. You will be taxed later. You say, we defer the tax. Some account like RSP, the RIF, LIRA, that's a pension plan, the education plan for children, some annuity, some pension, the CPP, will receive it when you retire or when you're 60 or 65 or 70. The all age security, you don't pay tax on it because you don't receive it yet. Once you get to 65, you're qualified for it. Some RDSP for people that have any disability, any autism problem, anything. You can have an RDSP, make some money, save some money for retirement. You don't use it, it's there. When you take it, maybe at this time, you will know how much you have to pay because government decide what the tax bracket will be, how much I will tax you, how much I will take from it. I don't know. So I would rather pay something now and later don't have to pay. This is where we have the tax advantages. There's some option we have. So you have a break. It's like government said, we give you a break. But we don't give you that much. Don't be too excited. we'll give you the TFSA tax-free saving account. So you make some money, you invest your money there. It can double, it's your good things, it's your problem. If you don't want to double, it's your loss, because there we won't tax you. Yes, we'll limit how much you can put there. Like every year, that's the amount you can put, not more. If you put more, we'll tax the excess, the extra $1,000, the extra $1 you put there will be taxed every month until you take it out. FHSA, if you are buying your first property, you can put some money there that reduce your taxes for your income for the year you put it there, and you don't have to pay taxes and the growth. Oh, that's a good thing. Or some life insurance. All life insurance are tax advantages because they are not taxable benefit, and you have individual critical illness. Every insurance, health insurance, disability insurance, long-term care insurance, and your primary residence up to today, you don't pay any taxes on primary residence. Also, you don't pay taxes if you win the lottery in Canada. You don't pay taxes. I don't know how many of you can win the lottery today. If you win the lottery, share with me, because I don't play, I want to win. And I will be happy to share this money with you because you are taxed. So make sure you understand taxes and make sure you put your money where you have some tax advantage. That's my advice for you. Understand taxes and use what you know to not be taxed all your life. It was your friend, Mr. Chris again. We'll be seeing you in another episode.